All right, let me now welcome Dharmesh Mehta, Managing Director and CEO of DAM Capital Advisors. They are going public, and I must share with our viewers that I've had the pleasure of knowing Dharmesh for almost 25 years now. We are friends. He's a mentor, and every time I want to understand something complicated or even easy for that matter about the IPO market, he's one port of call. He's taken many companies public, but today he's going public. So that's India for you. That how entrepreneurship in India is flourishing and how interesting and innovative businesses are now becoming big. Dharmesh bhai, so nice to have you on ET Now. Thank you for joining us. It is so nice to see that you've taken dozens of companies public and now you're going public.
Thank you, Nikunj. As you rightly mentioned, we know each other from last 20, 30 years. And what a journey it has been for you and to me both, and overall the Indian capital market journey. Just phenomenal.
Why are you going public? You don't need money. Your business is structured in such a manner that you are generating more cash than you need. Then why are you going public?
Well, Nikunj, the reason to go public are multifold. One, obviously, that when you go public, it's much easier to attract talent. As you know, our entire business works on talent. So talent will only come to you if they see a platform where they can grow and also wealth can be made. So that's one of the key reasons. Secondly, we are going to build a lot of other ancillary businesses as mentioned in the prospectus. And we wanted the investors to come in early to benefit from those businesses as and when it is built. And thirdly, we have an existing investor base. So we give an exit to those investors and they are also happy that eventually they made money and they were able to exit. A new set of investors come in. But the primary reason is to attract talent.
Into the holding structure once you go public, can you share that with us?
So once it's public, I'll be holding 40% and the balance will be held by the public.
Okay. Now, DAM Capital has taken dozens of companies public in last 3 years. In fact, it is a forefront of many successful IPOs. So who are your merchant bankers and what was your criteria for selecting your merchant bankers?
Luama is our merchant banker and we selected on a lot of other criteria which we went through that. And eventually the board decided that we should go with only one merchant banker. We don't require 2 or 3 of them to sell this deal. And Luama was the perfect choice for that.
Great. So it's good to see that you've just decided to choose one merchant banker here. So I'll stick with capital market. And can you share with us the breakup of your total revenue? How much is coming from capital markets and how much is coming from non-capital market? When I say capital market, IPO and QIPs both.
I would say investment banking, I would say, because capital markets consists of multiple products. One is IPOs, QIPs, rights, buyback, M&A. I would say it should be anywhere around 55%. And the balance 40-45% should be coming from institutional equities business, which is a broking business. But dominant share will always be coming from investment banking.
Investment banking is always a cyclical business, Dharmesh, which is that when market conditions are great, there would be activity in the market. When market conditions are dull, there would be dullness in the market. How do you plan to address the cyclicality of that?
See, we are building larger other businesses also around this. And what happens when the capital markets don't do well, your mergers and acquisitions, business starts doing much better. And luckily in India, the size has grown. If you look at earlier, if you want to do an M&A, you have to only go to the large corporates. Now you've got multiple buyout funds, maybe almost 10 to 20, which can cut $1 billion check. So as and when things correct and they're in a bad shape, you will see a lot of money coming in from private equity and a lot of M&A happening. That can be a large fee pool because there you don't need 100 transactions, you just need one good transaction and you can cover for the entire fees what you make from capital market in that one transaction. And keep on building other ancillary businesses as we have mentioned. Eventually we'll go into AIF, PMS, we'll do some retail broking eventually. So those businesses also will start scaling up and then they will be a hedge to anything which happens to the capital markets in the long run. But yes, there will be some cyclicality in the business. So if the capital markets don't do well, then obviously the business will suffer for a short term, not for a long term, because I strongly believe the India story is intact. And for next 5 to 10 years, you're going to see a phenomenal run for India.
But if you, let's say, move out of the capital market business, which is your core, you would be moving into institutional business, PMS like you mentioned, and also retail broking. Those are already very competitive, markets. So you are planning to expand into a space which is already competitive, where fees is already under pressure and where technology seems to be really taking over.
Well, investment banking is the most competitive business in India today. You got large platforms which are there from last 20, 30 years. And as you know, no new investment bank has been formed, at least in my sense, in the last 15 years. But despite that, we've been able to break through that. So I believe we have this kind of confidence that wherever we focus, we generally will crack it. There is no time limit, there's no rush. We'll only do when we believe that we are going to make a difference and we are going to be profitable. We are not here to burn money or to throw money. So only when I see there's going to be profitability coming in is the time I'll start doing that business. And every business is competitive today in India. It's not only these two businesses, but I'm sure there'll be some right to win for us, and we'll go and explore that.
You've had stellar growth in last 3-4 years, and that's largely because of the evolution of the capital market and how many companies have gone public. Can you maintain this kind of an growth in the foreseeable future, which is next 2 to 3 years?
I'm a strong believer that the India, story is very strong, and the China plus one is going to benefit India in a big way. So you're going to see large capex coming in India in the next 3 to 5 years, and to fund that capex, it has to be done by either equity or debt. So I think so the fee pool is definitely going to expand, and we are going to gain market share. So the whole hope is that we gain market share, and also as you must have noticed, the value of transactions has become very large. Hyundai recently did a 27,000 crores IPO. So you're talking now transaction sizes going to upwards of $2-3 billion and more to get listed. And the kind of liquidity which is there available in India right now is unheard of. So I think so in overall that bullishness, yes, as I said, few quarters can go back. But I think so the long-term story India is remaining intact, and the fundraising activity will continue for a longer time.
Don't you think there is disruption coming in the capital market space? I'm asking this to everyone who currently is representing the entire capital market space. AI is taking over just about everything. It has changed distribution, it has changed brokerage. Do you think this could change merchant banking also?
AI cannot change relationships. So fortunately, the investment banking business or merchant banking business is all about relationships and your execution, which is not going to happen with AI. Yes, there will be certain, in fact, there will be an advantage due to AI that the productivity will be much better and higher. And maybe things can happen much in a shorter time than what it takes today. So in fact, AI will be an advantage to people like us rather than a competition.
I'll ask you something which you already know the answer for, which is that valuations. What's the peer benchmarking which you've done? Because when you've taken other companies public, I'm sure you do peer benchmarking. What is the right peer benchmarking for DAM Capital?
Yeah, unfortunately, you don't have a very pure play investment bank in India today, because all my competitors or my friends, they have other business, ancillary business also, which is a large part of their overall revenue. So we had to actually evolve on the valuation. And as always, I rely on my merchant banker to come and give me the valuation, and they rely on the anchor investors. And we've gone by whatever faith the anchor investors have given us on their valuation, we'll go by that.
But when Dharmesh, the investment banker, got a sense of valuation from his merchant bankers, how did you react? Were they giving you a fair deal?
I gave a further 10% discount to the valuation which we were given.
Okay. So the idea is that you want to leave money on the table. The idea is that you really want investors and those who would be subscribing to the IPO, that they really should ride the entire journey of what India has to offer and what DAM Capital has to offer. But I'll just pivot back to what the current picture is. The current picture in the brokerage business is getting very competitive, and fee structures are coming under pressure. Now, the investment banking space is also highly competitive. What are the chances that the fee structure in coming times could come under pressure? There could be regulatory challenges here. Is that something which is a risk to your business?
That is the reverse, Nikunj. In fact, the investment banking is has a very strong entry barrier, because there are stalwarts sitting there from last 10, 20 years. It's not easy for any investment bank to come and break through that. We've been able to achieve that. As I mentioned, the value of transactions have gone up, which means the overall fee pool has jumped like crazy. So in fact, you're going to get a higher market share and a higher fee pool also. The broking business, definitely there is going to be some challenge. But as we said, we are just born. So we are actually gaining market share. So maybe after a few years, there can be a plateau. But that also we see a very high growth coming in. Meanwhile, we build the other businesses. But investment banking space is the reverse. The amount of transactions which are happening today, there are still those handful of 10, 15 bankers only who rule this space. So in fact, there the margins are actually going to get better rather than going down in coming years.
So apart from the capital market risk, which could be a function of the bull market or the bear market, what is the risk to a business like DAM Capital?
I don't see any further risk. Compliance risk is what we always worry about. So we want to ensure that we go to strong corporate governance. And that's why you can see our marquee board, which is 5 people are independent from that board. So that's a compliance risk is the only thing which I worry about. And besides that, it's just the overall capital market risk.
The fact that you're going public and you're not going for another round of capital infusion by HNI investors or private P investors, why is that? I mean, I'm sure that option must have also, occurred some point in time.
Nikunj, as you know, my business doesn't require large capital. So we're not doing any primary, as you know. It's all secondary. So as I said, you're giving an exit to investors. And if I get investors today early on, and if we are able to successfully build those other businesses which we have built in the current business, which itself is growing, I would like the second lot of investors also to make a lot of money and come back to in fact, go to them much earlier than rather than later when the entire valuation is taken away from them. So I would like them to be part of the growth story.
So if I have to summarize DAM Capital's IPO, and the proposition on the table is that, look, it's a bet on India's macro. The number of PE deals, the number of investment banking deals, what's happening in the M&A space, it's only going to increase as the economy goes higher. So you're right in there in terms of the size. Then comes the demonstration. From nowhere, you've become a brand and which is built to last now. So you've managed to gain market share in a competitive market. That is performance. Valuations, you've already told us that it is at a discount to what the industry averages, even though there are no industry averages. By and large, if I look at what large players are doing, what some of your peers are doing, it is a discount. Now is future, which is that what started as an investment banking firm has forayed into other businesses like institutional broking. 3 years from now, where would you stand? 5 years from now, where do you see DAM Capital moving?
I think so. We would have built some ancillary business around us. Also, one more thing you mentioned is we will look for a strategic tie-up globally, which will help us to do a lot of cross-border transactions. If we're able to do that successfully, because we have a very strong relationship down in India, we just need a good partner abroad, which can help us in our M&A business, not for the other businesses. So that also option is always open. We are not in a rush. We want to take a good partner as in when it comes, but the platform is able to offer that advantage today, which others will take multiple years to even come and establish what we established in the last 4 years. And as I said, India's story is looking good long term, not short term. I think so. These businesses will be built as we've seen globally how investment banks were born in 80s when US economy took off. India is in that stage of the next 10 years. We're hoping that the ancillary people are like us benefit from this India growth story.
Dharmesh, so nice to connect with you and good luck with the IPO. And it is so heartening to see that for a man who's taken many entrepreneurs public, he is now taking his company public. So good luck, my friend, and thank you for joining us.
Thank you so much.
If you like this video, then like, share and subscribe to ET Now.